Hello everyone and welcome to our final Canada Property Insurance Power Panel of 2025. Now in this edition we're going to look at softening rates, catastrophic weather, ESG, tech and more. And to take us on that journey we welcome back Laszlo Szentmiklosi. He is Senior Vice President, Broker, National Corporate Leader Real Estate at Marsh. Peter Kennedy, Managing Director at Aon. And Damian Eggleton, Senior Vice President, National Practice Leader Property at Gallagher. So welcome everyone, and with the recent softening in property insurance rates and a return of market competition, are we seeing any innovative approaches to layered placements or quota share structures for large or complex commercial property schedules in Canada? And indeed, how are brokers and insurers collaborating to optimize capacity and pricing in this environment? Laszlo, I'll come to you for the opening thoughts.
Thank you so much, Paul. And hi, everyone. Interesting question. I would rather say that we are seeing a shift in between innovative solutions / revisiting the actual current and existing placement structure, just being the market, as you mentioned, being softer, and we continue to see that trend. What I would say that definitely we are seeing more of the existing placement structures being revisited, seeing more appetite from carriers to participate even on larger primary layers, meaning that if you're able to set up primary layers, you might want to revisit the compressed prior layers and also reduce the excess layers as well, just from pricing perspective. Also enhancing wordings and revisiting deductible structures are also typically coupling up with these efforts. And to your question and points earlier, as far as broker and insurer collaboration is concerned, I think a few key factors that can facilitate these efforts is definitely utilize CAP modeling, confirming and verifying the client's exposure so that you can better understand the actual capacity required. You then can design and build the program accordingly, and making sure that essentially you align with the client's long-term KPIs and risk management strategy as well, so you can design the program accordingly.
Yeah, some great thoughts on collaboration there, Peter. Anything to add on that subject?
Yeah, and some of the layering, Laszlo talked about that in terms of the structuring. What we're seeing is much more complicated structures than we have in the past. Very complex mud maps that you typically would see in the US have now come into Canada, showing different layering, different quota shares, and insurers sharing a layer, maybe not sharing a layer. It's much more of a blended type of program to get the to take advantage of the soft market, to get actually the best possible program for clients as well. So we're seeing that. In addition, some brokers have ultimate other capacity that they can bolt on to their own facilities that they set up. That adds another dynamic to the structuring of the programs as well. And on the collaboration, I just add, obviously everything that Laszlo says is correct, but early engagement is important, as it always is, in terms of making sure that brokers and insurers are collaborating to get time to restructure the program or come up with the optimal structure as well. It takes a little more time than it did in the old days. Data sharing, and obviously making sure that we're using technology as best we can, whether it's as simple as a SharePoint site sharing data and information on a particular client, up to more complex information sharing between brokers and insurance companies.
Yeah, collaboration really has come more and more to the forefront, hasn't it, Damian?
Yeah, it really has, especially in this environment. I think when it comes to collaboration between brokers and insurers, there's a lot of data-driven negotiation going on right now. Brokers are leveraging advanced analytics and risk modeling to present detailed risk profiles to the insurers, which ultimately enables more informed underwriting decisions by our Canadian domestic carriers to put up their best available capacity and their firmest rates and be the most competitive. And side note on that, our second part is the capacity optimization. So brokers are working closely with insurers to identify and allocate capacity efficiently, so ensuring that no single insurer is overexposed. I think what we see in a soft market is a lot of aggressive competition domestically, and we want to make sure that we're placing business on the broker side for our clients that are with sustainable carriers that have the capacity to represent our companies today, but for tomorrow as they grow as well.
I've heard a couple of mentions of data already, so let me expand on that a little bit. Of course, as catastrophic weather events become more frequent and severe, Peter, what new data sources or modelling techniques are being used to assess and price climate risk for Canadian commercial properties?
It's a very fast developing area, but some of the areas that come to mind are satellite imaging, in terms of insurers have access to information with respect to the layout of the particular areas of the assets which they're looking to insure. GIS, which is our geographic information systems, also provide lots of data to insurance companies to help them, again, assess the risk. Weather data, whether it's current data or past data, all that is incorporated into the information sources that an insurance company uses to price a risk. And you get into third-party mapping as well. In addition to that, some of the other modeling, there's obviously stochastic modeling that a lot of the insurance companies use. There's also a lot of climate forward-looking modeling as well, which is more important as to where the risk might be. A lot of that is being developed by various sources, including reinsurers, et cetera. And just basically advanced technology in every area in terms of analytics, in terms of looking at the risks and the data, all the models, and their ability to adapt to the changing information. It's a rapidly developing area that a lot of insurance companies are on top of. Some are a little bit behind, but they're all moving in that direction for sure.
Yeah, and to Peter's point, Damian, there's just a wealth of new data sources out there, aren't there?
Yeah, there are all valid points by Peter, really good points. And, just kind of adding on to what he was mentioning with the CAT modeling, these CAT models continue to evolve, right? And they're incorporating more granular data and account for increasing frequency and severity for these extreme weather events. And models now are including secondary perils that we're now seeing in Canada, such as hailstorms and inland flooding and wildfire, which are becoming more prevalent in Canada. In terms of their client demands for greater transparency and insights, yes, the clients are looking for more transparency into climate risk and real-time insights and customized reports. And the one thing that I would say, there is challenges in climate risk assessment, particularly in Canada. We're not as advanced as the USA. So some regions in Canada do lack, sufficient historical data, whether on weather events, making it more challenging for models to accurately depict the risk. Excuse me.
Let's pick up that point, if we can, around transparency then, Laszlo. Do you see clients demanding greater transparency or indeed real-time insights into their risk profiles?
We do, yes, absolutely. And I think to Peter and Damian's points, data quality, data updates, and absolutely reliability remain key. Now, definitely, they also impact clients' operations, not only the existing operations, but also the future investment decisions. So they also would like to understand how we arrive to certain conclusions, what other impacts and factors, and even the environment can impact their current operations and future decisions. So transparency does remain key and will remain key. It will help them in making informed decisions, not only for currently, but obviously also for the future operations, which is absolutely inevitable for them to maintain. And again, perhaps it's a little bit overused terms, but with the current uncertain economic environment, macroeconomic environment, every tiny bit of information matters, not only from dollar perspective, but also from a liability perspective. So all adds up. So not only obviously it's also operations and future decisions, but how actually they can impact return on investments and how they can actually revisit their potential modeling to make sure they're going to be on track. And risk management and risk mitigation form key part of this particular strategy, making sure they're going to remain efficient and they're going to remain on track and they're going to remain profitable going forward.
Of course, as well, we're seeing embedded insurance and digital distribution channels gaining a lot of traction as well. So, Damian, how are brokers and insurers ensuring that those complex property risks, such as those in manufacturing, logistics, hospitality, how are they ensuring that those receive the tailored advice and the bespoke coverage that they require?
Yeah, it's a good question, Paul. I think when I think about embedded insurance and digital channels, or what I think about is a convenience and accessibility. And what I mean by that is that embedded insurance and digital platforms are designed to streamline the purchase process, making it easier for businesses to access basic coverage. These channels are particularly effective for more standardized policies, but when it comes to complex risks, we can't really take those approaches of utilizing digital platforms because these are such unique risks that require bespoke broking and insurance partners. So, for these complex risks, brokers remain critical for, as they're providing depth risk assessments, tailored advice, bespoke solutions, which I don't think digital platforms can replicate.
And of course, data, once again, Laszlo, has got to play a key role in these, right?
Data absolutely does play a key role and will play a key role for sure. I think to Damian's points, we believe that the digital platforms, what can happen is exactly what Damian mentioned, is accessibility. Why they will not replace, at least for the bespoke and tailored solutions. They will make the accessible faster and promptly available, which can again help accelerate clients make prompt or faster decision even on spot. The other point is that the overall bespoke wordings and products available or made available and developed for clients, that can also remove a lot of ambiguity from, for example, from policy wordings, which can have a positive impact if they sustain a claim, which can again accelerate the overall claims process and have them return to their operation as soon as possible. That's everyone's goal. So yes, it is a key position and key role to play, and it will remain key. And making sure that the individual stakeholders will have access to the respective information to those digital platforms as soon as possible, so the entire process can become more efficient, more faster. So essentially their financial exposures can be managed, contained, and perhaps even shorten down the exposure overall.
And Peter, any thoughts to add around brokers offering that tailored advice?
Yeah, I mean, it's critical. I mean, that's how brokers now differentiate themselves, I guess, from digital platforms. So I think it's really important that brokers, set up specialized teams that provide the bespoke consulting services that major complex risks require, clients of those assets require. And there's a couple ways to do that. You can embed certain services within the policies. In terms of loss control is a great thing to put into a risk control policy. In terms of a bursary for the cost to do the risk control. K&R for years had, one big thing about getting K&R insurance, we're not talking about that, but in general was that you actually get the services of the negotiation with the product in addition to the risk transfer. So those types of things embedding to bring up more consultative services are really important. And from the broker's perspective, its claims is another important area. If the technology is great, but you also need some strong claims advocacy if you have some very complex claims that there's some gray areas on. So I think that's how brokers have to kind of differentiate themselves. The technology is great. It works really well, but sometimes you need, at least to this point, you need expertise, and brokers really have to focus on providing that to clients.
And of course, as well, we're seeing an increasing focus on ESG, regulatory scrutiny, of course. Laszlo, how are property insurers and brokers addressing the challenges of insuring assets with high environmental or social risk profiles? Are there any new exclusions, requirements, or value-added services emerging in this space?
Good question, Paul, and especially because ESG is a constantly and continuously evolving space and platform for everyone. Yes, clients and businesses do engage, and it's an important part of the business, the ESG, but obviously it also does impact the overall risk management solutions, risk mitigation strategies, not only for them, but also for insurers. For clients, it is very important that they continue to explore options and implement plans, how to increase and promote awareness, how to make existing operations more resilient, including ESG factors. And obviously, that will impact the overall risk appetite as well, which then can obviously impact the carriers' overall terms and conditions, whether they're going to implement or apply operation-specific deductibles, terms and conditions, wordings, and languages. Key point to add, I think, is that we see an increase in contractual obligations to follow or adhere to certain ESG requirements, meaning that impacts the overall insurability, which obviously puts onus on our clients to make sure they comply with those requirements. And from the insurer's perspective, we have to make sure that the solutions, products, policies do align with those requirements as well. From the second part, with respect to the challenging insuring assets with high environmental or social risk profiles, yes, we do see those. But again, going back to some of our common themes and topics even discussed earlier during this discussion, is that the data will remain key. How you engage risk assessment, engineering, how you actually find solutions to those challenges, work with your client, how they can actually improve those challenges, and position those with the carriers as well, so that they can clearly understand the actual state of the exposure and the steps and mitigations that the client is actually taking, and not only present it to them, but also obviously work with the insurers as to what they would like to see, so how it would actually make it more palatable and more appealing, the exposure to them, so they can also write the bespoke products and wordings and terms and conditions our clients need.
Ida, from your perspective, are you seeing insurers move in that direction where they're able to provide brokers with what they need?
definitely insurers are moving in that direction, some faster than others. I mean, they've always been there to some extent. We've always had very strict underwriting guidelines in terms of what they're looking at with respect to clients, whether it's, pollution and legacy issues and contamination on some sites. So insurers have always taken ESG related items, just not maybe under the banner ESG over the years. And they've always provided, in many cases, restrictions in coverage if there's not some environmental things that they're doing. We do encourage our client, as Laszlo said, to bring out their ESG profile and proposals and whatever annual reports on that, and provide those to the insurance companies, because they are considering that as part of their underwriting process. Obviously, some more than others for various reasons as well. And I mean, some of the insurers have actually been at the forefront of that. There's a couple of insurers that actually provide incentives to clients to invest in resiliency because they view it's a win-win with respect to those types of mitigation. So it's always been there, and they're obviously moving more now because of other pressures as well. But I think insurance companies have always kind of been at the forefront of actually really taking this into consideration and actually looking for things from clients, and if they're not satisfied with something, put in restrictions of coverage. But it's a great learning process for clients as well, that if they do hear of things that insurance companies are concerned about, they can incorporate that into their own ESG plans, and it's a win-win as well.
And Damian, from your perspective, are there any innovative products addressing these risks that you would highlight?
Yeah, for sure. I think just kind of adding to Peter's point, I mean, a lot of these products have historically been there. Some are a little bit some are evolving specifically because of these ESG measures that corporations are taking. When I think of one alternative risk transfer vehicle, that could be parametric insurance, for example. Parametric policies are being introduced to cover specific climate-related risks, such as flood or hurricanes, based on predefined triggers. So that's one alternative risk transfer innovative insurance product, which is out there in the market. It's evolving, it's becoming more popular, and clients are more keen to understand how they could potentially pursue something like that if they do have risk in high cat regions. Other products which have been there in the past, but to Peter's point again, are coming to the forefront now. Green insurance products, policies that incentivize sustainable practices, such as coverages for renewable energy installations, or discounts for energy efficient buildings are gaining traction. And lastly, pollution liability insurance. Specialized policies are being developed to cover environmental liabilities for industrial sites, and other high-risk properties as well. So those are kind of like the innovative products that I think are coming to the forefront today.
So just to continue on the innovation theme then, so as technology investment accelerates, Peter, what would you just say are the most promising advancements in claims management, loss prevention, or client servicing that you expect to see adopted by Canadian property insurers and brokers over the next year? And indeed, how are these innovations changing client expectations and the broker-insurer relationship?
I'll talk about a couple of areas, Paul, and this is as we speak today, and I know you said over the next year. As we speak today, I see the biggest change in claims with respect to technology. Artificial intelligence can help with respect to triaging of claims at insurance companies, determining what priorities need to be addressed first with respect to a claim. Documentation and uploads is a big thing. You look on TV, you see TD, you can take a photo of your car and actually give you an online estimate for the repair costs. I mean, this is the type of technology that's out there now that wasn't a while ago, and I can only see that getting bigger and better in the next year and even beyond that as well. I mean, we've seen mobile applications that have been adopted by, certainly on the insurance consumer side as well. And even in the corporate side, we're having applications for our clients that they can use on their phones to look at their assets and look at their policies, et cetera, et cetera. So I see even in claims, more algorithms looking at fraud and trends and claims. I think that's one very promising area. That's a win-win for everybody around. And also even the simplistic things, more like video inspections, either virtual or using drones, whatever the case may be. I see that technology is helping, become more efficient and more quicker to get information to all parties involved with respect to a risk. I think those are great, promising things. I'll leave the other loss prevention and client services to talk to other people, but I think it's no different in commercial property insurance than any other part of the society. People want speed. And I think that is one thing that this technology helps bring to the insurance, and is well overdue.
Well, there you go, Damian. Peter has left you with loss prevention and client services. So any advancements in those areas that you would want to highlight?
Yeah, thanks, Paul. I see advancements in both loss prevention and in client servicing. In terms of loss prevention, predictive models are being used to identify potential risks based on historical data, weather patterns, and property conditions. And really this allows insurers and brokers to provide tailored, recommendations for risk mitigation. There's also climate risk monitoring, where advanced tools are being developed to monitor and predict climate-related risks, such as flooding and wildfire, enabling clients to take, preventative action. In terms of client servicing, the digital platforms, personalized digital platforms, so insurers and brokers are investing in client portals now that provide personalized dashboards, policy details, and risk insights. And this allows clients to manage the policies, request changes, and do all this in real time, which is really important.
Well, I don't know what's left, Laszlo, but any final thoughts? I mean, I guess we've got to be mindful of AI as well, haven't we?
Sure. Great thoughts again by Peter and Damian. And perhaps maybe just a quick sum up and adding some additional thoughts. Would break it down maybe perhaps in three categories. One is exactly what Peter mentioned, is overall speed. And as Damian also mentioned, accessibility and data points, accelerating the overall process, making sure that the restoration, perhaps from claims perspective, is much faster, accessing data points much faster. You can make an informed decision much faster. Obviously, also making informed decision based on future underwriting assessment and your particular operation. That's exactly what Damian also perhaps alluded to, from understanding and mining the data, analyzing the data, and using those for the future decision-making process, from underwriting, risk control, and loss mitigation prevention and processes as well. It also can reallocate resources, because for those processes that are standardized, perhaps the less complex, standardized, homogeneous claims that the AI can handle, so then the actual knowledge of the claims advocate can actually focus on the more complex claims and can help again clients. The clients still require the support and sometimes the real time, don't get me wrong, but a human element type of support and advocacy when it comes to more complex claims, obviously. Now, the third category is definitely, which comes with AI and technology in general, is definitely the data privacy and understanding the AI models and potential the downside of the models and help improve those downsides. So making sure we are handling, obviously, sensitive data all across and all along the actual process, making sure that we align, making sure those portals that Damian also mentioned have very strong data protection features so that no one is able to access. And obviously we hear lots of often lately the hacking and ransoming essentially data, and making sure the legal and ethics concerns are also addressed and resolved so that the whole process actually is sound, solid, and can provide the actual solutions that clients are looking for. And eventually this comes down, this is why clients buy insurance. If you have a claim essentially is the key service for insurance. So they would like to have good quality of service when they engage the product.
There you go. Lots of innovations to watch out for. Indeed, lots of interesting new information coming our way in 2026, I'm sure. But for now, my huge thanks to all of our panelists for their contributions throughout the year. And thanks to you for watching. We'll see you next time right here on Insurance Business TV.